the crypto market is slowly trying to get back on its feet. It's now close to $2 trillion market, and you see a lot of coins moving. When you look at last 24 hours, you're able to see a lot of different coins trying to move 20-25% a day. Now, that's really good to look at when we are eyeing towards the altcoin rally season. We have a lot of different coins which are popping. That's actually good news. But what you need to look at for XRP is like this. Say we talked about this. We had a breakout. We came back. We retested that level. And now we are bouncing. So yeah, the volume is not that huge. You're going up, but you don't actually get that much momentum here. But you step back and you're like, okay, in this one, what we can observe is like we have been below this from like 340 days, almost a year. We've spent below this particular resistance, and right now the MACD has crossed to the upside and it's in the positive zone, which is bullish. Then you look at the RSI, it's moving to the upside. You are getting an indication that it's going to go to the upside, and then you move on. You kind of go back into a weekly chart, and that's like, okay, the resistance, we've talked about it. But look at the MACD, look at the RSI. On a weekly, you're just about to start something bullish, because here, as you can observe, yes, we are going to cross to the upside in MACD. That's great. And then you observe the RSI, it's close to a breakout from this pattern. Now this pattern is even longer than what you have in this price, because the price started going down after the peak of May, whereas if you observe correctly for your RSI, what you get is like, you know, still this point you have already done like 476 days. Now within that you understood like, okay, 130 days we are still going up. So that was a divergence back then, which you are looking at right now. Okay, that's a weekly chart. It's going to go bullish, and as it go bullish, be ready to take the profits, because this market is going to show you different stuff, different coins popping like this with patterns, right? We observe patterns. Say for example, we were looking at Jasmine before. We saw that just went off 350%. Then we were looking at audio, right? And this is kind of similar pattern which you're observing here in XRP on a shorter time span, right? You had that same pattern. Great. Then what happened? It just took off. It went. So now if you're looking at different coins, all of them are showing you same stuff. They are breaking higher, they are moving higher. We've been talking about a lot of different coins, and all of them, as you can see now, is breaking and running higher. So the market is slowly trying to get back on its feet, and if you are well aware of this, your portfolio would be properly arranged for this. Your portfolio is well balanced for this upcoming rally, because this market is showing you a lot of different stuff which I really want to take you guys through. And at the same time, there would be a question, okay, interest rates are slowly going up. What about that? You can really have big questions about that, because that is concerning. Then it's not only the interest rate, right? You're looking at the interest rate, great, fine, but at the same time, you're also looking at a possibility of economic slowdown, right? And then you're asking, okay, will this be a bull trap? Can this be a bull trap? You're breaking to the upside. The altcoin market looks great, but can this be a bull trap? So that's why I really want to take you guys through this stuff. We are going to discuss this, what inflation does, and how it plays out with a recession. Not every time when you have a recession, you have a huge inflation like what you have right now. So what is going to be that difference in this inflation, then the recession indicators and the interest rates? So you're going to compare the interest rate, you're going to compare the recessions and inflation, and then jump on to look at how gold has performed during these recessions, because this is really important. Then you compare gold with Bitcoin. Now, I'm using Bitcoin because that's one of the assets which has this long to compare. And this comparison gives you that idea. Wow, in this particular environment, now you can talk about a different stuff, a 4-year, market cycle, halving, blah, 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 and a lot of other stuff just related to Bitcoin. But as an asset, it is performing well enough. And then you look at the macroeconomic situation with the interest rates going higher in US, Korea, around the globe, and then you see possibilities of recession are kind of at 100% with a high inflation rate. So we are going to discuss this, break these down, and then come on to talk about this. So as Bitcoin breaks this high with gold, yes, they are going to do well. Both are going to do well, but the ROI is going to be different. So let's break this down. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. So you look at the crypto market and you do understand there is a lot of possibilities coming on, but at the same time you do have to understand this rally will get stopped at one point. Now it can be 60, it can be 70, it can be 80. Looking at this trend, you can still go towards 80, and that may not restrict you. So we just looked at the shorter time span for Bitcoin. You got a double bottom. You are near to that resistance. So unless you break out, you're going to come back down. But that's on a daily RSI, showing you that it's near resistance. We may not actually continue higher and break out, but when you step back and look at the same on a weekly, the RSI suggests that it still has some room to go to the upside to get towards that resistance and get stopped if it is to get stopped. Otherwise, we are going to break that one, right? So here on a weekly, if you have that room, on a daily, you may actually break to the upside, if that makes any sense to you. Then you look at the price, it's going higher. So if we manage to break this level, which is 42,300, that's a higher high in Bitcoin. So getting that higher high structure here is really important for Bitcoin. Why? Because if you actually go on to a daily chart, zoom in, yes, this is also going to act as a resistance. But if you manage to break above this level, that gives you a different sense. Okay, you are making a higher high, so you do have resistance. It's not like you're going to go sky high from that point. You do have that resistance near 44, 45k, which would be kind of, the previous level of support and then resistance, right? So you're going to get and tried that level. Fine. But what's the possibility of this happening? We can say right now, okay, that's a double top. Fine. Okay. But what if this plays out? Because if you are looking at the indicators, there is a possibility. Now, we talked about this a while back. It shows you a possibility of a double bottom in the MACD, in the RSI on a 3-day chart. So what if the price is to bounce from here, go back to 50, 55, 60? So that is literally like a higher low here compared to this one. And it gives you a sense like this. So if you're breaking to the upside, now why do I actually talk like if we are going to break from there? Because if you remember, I've talked about Zcash. If you go look at Zcash on, different time horizon, you can actually see a similar pattern where Zcash is actually doing it. Now we had breakout calls. It's actually working perfectly fine. But if you look at this is the pattern which we are actually talking about. So right now, this pattern broke to the upside. Great. So is it the only asset which is getting that kind of vibe from the market? No, it is not. Because if you actually go, yes, if you observe this particular pattern in Ethereum Classic, you can see, okay, we are getting towards that resistance. But ultimately, this is the same pattern, right? You follow the pattern and you are like, okay, this came down back to the support. We bounced. We came back, retested that support, we bounced. So if you look at the indicators, it is actually suggesting you it can go higher. It's breaking to the upside on the RSI. You are coming close to that resistance level in the price. So if you go back to the Bitcoin chart, you look at the same stuff here. Okay, fine, you're getting something similar. So if it is to repeat what you're observing in the altcoins as a price structure, that means you can still come back here 44, 45k. So looking at ETC, yes, you got that chance, and looking at Zcash, you have probability that you would go to the upside, right? You can break to the upside. So if you are just openly looking at that, okay, how did that happen? You came to the all-time high here, then yes, you corrected back down, but that correction was a retest. So now you need to get that in Bitcoin, and then for XRP, you need to break this one. So that's a weekly. You may have to wait for a week or two to get that playing out. So that's like more patience. And most of the XRP holders here for a long time, they do understand patience is going to pay off. They do understand market is about patience. Okay, now let's jump on to this discussion, because this is one of the important stuff which I think you guys will definitely need. So yes, you see a lot of fluctuations in the inflation rate. Fine. Now we are looking from all the way from 1980s, and you're like, okay, we've had 15%. We've had more than this, what we are having now. But do we really need to be on that stage where you are having the recessions and the inflation? Because in between what we have experienced in 1990, 2000, okay, what I mean by that is, you look at this, 2000s we had a recession, 2008 we had a recession, then you go to the recession and gold, and you're looking like, okay, yes, we had one in 2001, 1990, and then 1980s. So in 1980s, what happened is, like, in 1980 precisely you got one, then 1981 to 82 you got another one. So you got two recessions playing together, and that's one of the reasons why you actually see the inflation dropping there. Now you're like, okay, market is going down and inflation is going down. What's happening? Yes, no one has the purchasing power to buy more stuff, so the demand in the market is actually going down. But right now it's actually the opposite. You are seeing like, okay, the market is slowing down, it's about to go down, but the inflation is increasing. Now understand what happened in 2008. At that time you barely had 6% inflation rate. You had this massive correction in the market, but you barely had 6% inflation. Then you go back to the 2000s and 1990s, and you're like, okay, the 2000s, yes, you had recession, but you barely had 4% inflation rate. So right now, your purchasing power being depreciated on a regular basis is super high compared to last 20-30 years. And then you come here to look at this. Okay, so that means we are here at a possibility where the recession is going to kick you out. So if you are prepared, look at what the central banks are doing. The rate hikes, if you observe these, say 2000, the rate went a little bit up and then came back down immediately. Okay, before that, it was actually, the rate was slowly being increased, and by 1989 it started going down. Now why does those stuff come into play? Because if you are comparing with this, okay, here we had a recession in 1990. So just before that, what happened? The market actually tried to increase the interest rate. It didn't go well. It came back down. So that means the market or the Fed pushed the interest rate to the upside from 5, just about 5 towards 10. And then the market collapsed. So you get that narrative clearly, right? So the market collapsed here. Then you are looking at the next one, say 2000, 2001 range. The market tried to push the interest rates to the upside again. What happened afterwards? The market collapsed. Now again, you are looking at the last one, 2008, 2009 recession. So what happened just before that? You look at this. The market or the Fed was slowly increasing the interest rate, and from near zero we went close to 5%. From 0 to 5. And then what happened? The market collapsed. So each time when the cost of money, now interest rate going up means the cost of money increasing. What does that mean? Assets which grow higher in price just because the cost of money is less, they are going to be impacted first. You can look at the real estate market. Now when the interest rates are slowly going up, you see that area where people are running into the housing market saying, okay, I need to get flat rate before it actually goes sky high. That's kind of the top area where you get the blow off the top in the housing market, where people are like, I've talked to, during the one-on-one sessions, I've been talking to one of my member in Canada, and he was highlighting a house which comes into the market for 650, 675 is being sold out for 810, 820. That's how crazy the market is right now. People are overbidding and getting themselves into an area where the actual price is lower, and they are not getting higher value, and the market is at the top. So people are so eager to put their money into work in the market, and the cost of money is about to increase. So if the interest rate is about to go to 2%, we'll have to see how that works. But I don't actually think at this point this rate hike will be substantial to slow this one down, because the macro political scenario, if you are looking at that, you're like, okay, it's not something small. There's a lot of big things happening. You have a Ukraine-Russia issue. You have the Chinese, supplies having damage. So that supply chain issue is also coming in. Now, all sorts of these stuff are coming in at a time when the macro scenario is not looking good. The stocks are high. The interest rate was low, but right now going up. So now you come back to that comparison between gold and Bitcoin. Gold was in an accumulation state all the way after that last peak during that recession. Because during recessions, gold go high. It's a safe haven asset for thousands of years. So that does happen. But the difference is the scale at what you see this, right? Say Bitcoin was in an accumulation for like 400 days, whereas gold was 2000 days. So that's like 5 times more. Then you look at the run high after the breakout, and that's like 50x. Then you look at the same for gold, and that's like 60%. So you're like, okay, that doesn't actually play. Well, the accumulation was like 5 times more, and the upside was like 10 times more in Bitcoin, right? That's like, big narrative. So yes, your risk is higher than in gold. If you are a low risk guy, you don't have that risk appetite, then, you can directly go to gold. But if you have that risk appetite and your capital which you are deploying into that asset is not the biggest, you have a lot of upside. Now, I'm not saying go to Bitcoin. I'm saying the asset class, the crypto, the blockchain asset class, because you have a lot of different assets right now based on the protocol, based on the utility, based on how it's delivering value to different people. It's a huge opportunity. Meaning you are looking at this, yes, you had consolidation. Yes, Bitcoin and crypto is getting that. You also get the same in gold too, right? You're observing the total run up, then you came back down. When gold was going up, in the same time, Bitcoin also went up. Now that run for Bitcoin was not huge, but it still managed to do 300% when, gold again did 60%. Then there was a correction. Yes, you get the same correction here in gold and in Bitcoin on a similar time frame. And then, you get this massive correction, which is a rounded bottom. So if gold is showing this rounded bottom and going higher, last time when gold did this, Bitcoin rallied to the upside. So putting that together, that means next 3 to 6 months towards a year, you are looking at this asset class as a bullish indicator to run high. So now you come back onto the Bitcoin. Okay, you go zoomed out macro as much as possible, and you're asking the same question to yourself. Yes, people are calling for a double top. Yes, all those stuff are there in the market. We are kind of, it's sky high compared to where we are back in 2010, 2014 range. But do you consider this asset as an undervalued stuff or overvalued stuff? Because if you cash out, that would be usually based on overvalued territory. Now, yes, the volume is dropping, the volume is dropping, the volume is dropping. There's no doubt on that. But when you actually go on to the altcoin market, that's one of the reason I highlighted. I'm not only talking about Bitcoin, I'm talking about the entire asset class. The new asset, which is the digital assets, now getting a ton of attention, getting a lot of money more coming back into this. So when you zoom out, you actually get this picture clear. The market just consolidated. If you forgot about this, I really would like to remind you where we are in this market cycle. You get this pattern over and over again. You are doing something similar. If you remember, we've talked about this stuff happening, or at least the possibility of this coming in a little while back, maybe a month or two back. We've highlighted this possibility. You're going to see this after a corrective session of a pattern like this. So if the price structure is going to follow this here, giving you an identification like, okay, yes, you had the top, you went back above the top, you tested that range for around 350 days in last cycle. In this cycle, you are getting even more days. So if you take that's 350 days in the last cycle, and right now from above the top, you are like 390 say somewhere close to that, right? So you put that numbers, you are like, okay, cycle is having more time. Each new cycle is coming out with more new time. It needs more new time to go to the bottom. New time, new cycle. Yes. So you are getting that price structure where you are like around 20% more time. Great. So if you are to break to the upside, go that parabolic move, what are you expecting this market to do? Because if it is me, I would more likely just plot these two lines which the market shows me, not me plotting or saying, okay, this is going to happen, but just connecting these, and I'm like, okay, that's crazy stuff if that's going to happen. So what's going to be the conservative stuff in between? You can look at different levels, saying, okay, these had been resisting the price before too. So what if we are going to get resisted here? Okay, fine. Even that is a massive run up. So if you are in the market waiting for this rally, understand 50x, 100x, those numbers, big numbers are coming. But the only stuff which can stop you from getting those big number is you moving out of an asset just at 100% gain. Just 1x, 2x, and you are like, okay, let me move, take this one, go that way. Unless you are a robot and you don't make any mistakes, that's fine. But we are human beings, and if you try to do that, that's gonna imbalance your portfolio, and that's one of the main reason why we try to put these up in the Patreon, where you are looking at a ton of different assets. You know what the targets are, when we are hitting the targets, what an asset is about to do, the probability of that, say you understanding this and entering at the bottom would have given you an opportunity like this. You understanding that this is going to break out gave you an idea that this is going to happen and your portfolio goes green. This, if you are in that asset or you're going to buy that asset, gives you that idea, okay, let me buy in. What happens? The price goes higher. Then, it's not just one or two assets. That's one of the reasons why we try to update you guys on a regular basis on almost every coin which you have in your portfolio, so that you know which is an opportunity and which is a risk. So you mitigate that risk and be balanced before this 50x run up. So you are not actually making that rebalancing, kind of emotional stuff when the market is running. So when some of the coins are running and not that coins in your portfolio, don't go panicking. Just look at the price structure, see whether it's close to a breakout. If so, don't move out, because this one is going to generate more ROI than the others. And if so, moving from here to an asset which already broke higher, you are missing that ROI. Don't do that emotional mistake, because we are all human beings, and when the market runs up, you don't want to miss that opportunity. Imagine, yes, we had this rally here and we got something similar in this cycle here. So we got the consolidation, fine. And if you are to do some mistakes in this rally, that's going to substantially reduce your purchasing power, increase in purchasing power in the cycle, because after that, you're only having wave 3, which is comparatively small, and then a 4-5 years long consolidative corrective bear market. So we would be taking this purchasing power increased one, moving on to a different market to compound that. So if you're prepared for that, great, do that. Learn on a regular basis, put more efforts to generate this inside your brains, right? You learn, and that's going to be increasing your purchasing power. That's going to be value for your portfolio. So guys, if you received value for your time, please do hit that like and subscribe button. That supports the channel a lot. And if you regularly want these kind of updates, you can look at the Patreon. The link is given in the description below, where you get a ton of value for your portfolio so that you're not going to miss out when the market goes crazy and you are in right assets making those. Understand, we have 10,000, 15,000 assets. You're not going to get the pumps in each and every one of them. If you manage to have 10 assets and 5 of them are doing great in that cycle, that's going to give you that above average gain. If you have 50, you are getting 30, 40x. That's great. If we are going 100x and you're making 60, 70x, that's exceptional in my view. So guys, I'll meet you on the next video. Bye for now.